Tesla stock isn't just getting destroyed, it's getting absolutely obliterated. And a lot of you are asking me what's going on with the stock, why is it dropping, how do I feel about it? And as a Tesla shareholder myself, am I planning on adding to my position during these drops? Well, let's talk about it. What's up, everybody? My name is Ale and welcome to my world of stocks. Please consider hitting the like button if you enjoyed the video. It really means a lot to me, but let's not waste any time. Let's go ahead and take a look at the stock and let's pull up the stock chart. Okay, so you can see here that in the past 5 years, Tesla is still practically flat given the horrible performance this past year, but in my opinion, I think this may actually be a huge blessing in disguise considering how much the company has grown and evolved during the past 5 years, yet you can still buy the stock at 2014 prices like nothing ever happened, but we'll talk more about the overall company in a second. Now, speaking of the horrible performance in the past year, the stock has absolutely crumbled, falling by around 45% from their 52-week high to their 52-week low, which they just reached the day of this recording at around $208 per share. That's the result of another 7% drop today, bringing it down about 12% in the past week alone. So what the heck is going on with the stock? Well, we recently came off of 2 straight quarters of profitability at the end of last year before sinking heavily this latest quarter, where they reported adjusted EPS of negative $2.90 versus negative 69 cents expected. Obviously, that's a huge miss that resulted in huge losses of over $600 million for the quarter, and it didn't help that revenues missed by about $500 million as well, coming in at $4.54 billion versus $5.19 billion expected. But in my opinion, this was likely to happen for a few reasons. For one, the automobile industry is heavily cyclical, as you can see on this chart here that shows that US auto sales always plummet at the turn of the year before surging much higher around summertime. You also have to keep in mind that Tesla's federal tax credit of $7,500 was cut in half this year, so demand was a lot higher than normal at the end of last year to take advantage of that federal tax credit. And as if all of this wasn't enough of a perfect storm for a disappointing first quarter, Tesla even dealt with logistical issues, as this was the first quarter of the Model 3 being shipped outside of North America to overseas markets like Europe and China. In fact, they only delivered around half of the quarter's vehicles 10 days before the end of the quarter, an issue that resulted in Tesla having to push a large number of deliveries into the second quarter as a result, something that I haven't seen a lot of reports even mention. Still, despite it being a pretty horrible quarter overall, it wasn't all bad. Sales did drop by 37% quarter over quarter, but they were still up by 33% year over year. Not to mention that yearly sales have taken off like a rocket ship, climbing from $4 billion in 2015 to over $21 billion last year, with some pretty incredible growth rates ranging from 70 to 80% in each of those years. Again, this is all with the stock price still being relatively flat because of the horrible kind of recent performance. But even though deliveries for the Model 3 were down 20% quarter over quarter, they were still up by over 500% year over year. And despite only seeing total deliveries of about 63,000, they still reaffirmed guidance of as much as 400,000 deliveries this year for an increase of 45 to 65% year over year. So they must be expecting sales and deliveries to ramp up heavily towards the end of the year, and I'm inclined to believe them for reasons that I'll explain a little later in the video. But first, I want to explain why the stock dropped another 7% today, and that mostly had to do with Elon Musk sending an email out to employees notifying them that they will be cutting costs further yet again in order to avoid their cash burn rate that apparently is so high it could even drain the $2.2 billion that they have in cash in just around 10 months. And I have to admit that is a very scary thought. Keep in mind that this is coming off of huge layoffs just a couple months ago and a $2.7 billion capital raise only a couple weeks ago. The newest cost cutting that Elon Musk refers to as hardcore is likely also due to promises that they made last quarter of significantly reducing their losses in quarter Q2 and returning to profitability in Q3 and Q4. Promises that likely will not be very easy to keep, in my opinion. But in any case, I do remain bullish on Tesla for the long term, and that is for several different reasons. For one, I don't see anyone dominating the EV market quite like Tesla does, and they remain well ahead of any competition in autonomous driving as well. Now, when looking at the EV market in general, and you guys know this by my previous videos, I am extremely bullish on the EV market kind of heading into the long term, but it's pretty much guaranteed that EVs will eventually overtake ICE vehicles. In fact, Morgan Stanley agrees with that as they predict that it will happen within the next 20 to 30 years. That may seem like a long time, but you have to be realistic here in that you're talking about a completely different type of vehicle, completely disrupting the entire automotive industry. So that's obviously not going to be an easy thing to do. And if we put a monetary value on this, we're talking about a global market that is expected to grow from just $118 billion in 2017 to over $500 billion by 2025 at a compound annual growth rate of over 22%. And while it is true that half of those sales are practically made in China, which does make me a little worried given the whole trade war and their slowing down economy, I still think that Tesla will find some pretty good success there, given that they'll have an entirely new Gigafactory up and running by the end of this year to produce the Model 3 and Model Y domestically within China. In fact, they're so bullish on the prospects of the new Gigafactory that they even predict that they can hit 500,000 deliveries this year if the Shanghai Gigafactory reaches volume production by the fourth quarter. But even if that doesn't happen, they still think that they can hit 500,000 in the 12-month period ending in June of next year, which would obviously translate to huge sales. And keep in mind that the Gigafactory in China is also a great way of avoiding huge tariffs, since they can just build and sell the vehicles domestically within the country itself. That isn't to say that China can't do something shady to slow down Tesla as a sort of retaliation to the United States, but I don't think that's very likely, although I do acknowledge that I could be wrong in that regard. But even here in the United States, Tesla is already dominating, with the Model 3 far outselling any competition by gigantic leaps last year. And even if you think that the growth can't continue, you have to keep in mind a few different variables. For one, sales may have slowed down recently, but again, I think a lot of that is due to the cyclicality of the automotive industry in general. For two, EV sales in the US only make up about 2% of all US auto sales, so I think there's still a ton of room for growth in the future. And that brings me to reason number 3, which is that Tesla doesn't even sell the best-selling type of vehicles in the US yet. That crown goes to SUVs and pickup trucks, which are heavily, very popular here in the United States. And I know what you're saying, the Model X is technically an SUV, but that thing is way out of anyone's budget. It usually costs over $100,000, but the Model Y, on the other hand, will be a small SUV, and it'll only cost around $35,000 at the cheapest version. So once that version actually releases, I think it's going to do really big numbers, and I could easily see it doing numbers similar to the Model 3, if not even better, probably even better. And then also don't forget that they're even working on a pickup truck, and that's the second best-selling segment in the US, so I could see both of those doing very well. And all of this isn't even mentioning the fact that Tesla has already collected over 8 billion miles of autonomous driving data, making it a leader in the category, with plans to reach full level 5 autonomy sometime next year and ideally launch a robo-taxi service around the same time. By the way, I feel like people really underestimate the value of autonomous driving data, but for context, most analysts peg both the ride-sharing and autonomous vehicle markets at around 20% compound annual growth rates for the next 5 to 10 years, and ARK Invest even pegs the autonomous platform provider market at north of $2 trillion within the next decade. Meanwhile, the next closest competitor in autonomous data collection is probably Google's Waymo, and they only have about 10 million miles versus Tesla's 8 billion, so it's not really a close comparison. So in the meantime, as a Tesla shareholder, I think we're just gonna have to kind of weather the storm. I think Q2 will probably continue to see some struggles into Q2, and then I think we'll probably start to see a lot of improvements in Q3 and Q4. But the good news is that meanwhile, while all of this negativity is just kind of snowballing, it's all being baked right into the stock price. So again, you're getting a stock price for similar levels to what it was trading at, 5 years ago, yet the company has grown by huge amounts during that same time frame. So I see it as a buying opportunity personally, but that doesn't mean that you should buy the stock yourself. That's more of a personal decision you got to do based on your own research and make an educated decision there. For me personally, I still consider Tesla a speculative stock, meaning that it is one of the smallest, kind of like tiniest positions in my portfolio, and I buy it very slowly, gradually over time in very small amounts. So as the stock continues to drop, it's very easy for me to kind of add to it and lower my cost basis. And anytime that the stock drops, it's so small in relation to my portfolio that it just doesn't really bother me. So it's very easy for me to be invested in Tesla and see it dropping and not really be affected in a negative way. Now, I receive comments all the time from people saying it's their number one, their number two largest stock, they're going all in on it. And I'm not criticizing that. I'm not saying it's a bad thing or, it's whatever, it's your choice. I don't really care. But for me personally, that's not really how I'm looking at Tesla. I'm looking at it still as a speculative stock. So you should just kind of know that for context. We're going to be two different types of investors here. My strategy is probably different than yours, unless you are kind of doing a similar approach to what I'm doing. But anyway, that's just kind of how I feel about it. People are asking me, am I still bullish and am I still buying the stock? Yes to both questions. I'm actively buying the stock. I'm just doing it very slowly in small amounts. But anyway, I hope that you enjoyed the video. Thank you so much for watching. Make sure you hit the like button if you enjoyed it, and subscribe if you haven't already, and I'll catch you guys in the next video. By the way, I think the whole trade war with like the US and China is probably going to lead to a lot more volatility throughout this year, and I could definitely see Tesla just kind of struggling along with the broader market, although sometimes Tesla kind of goes the opposite of the market. But anyway, that's a whole discussion for another day. But anyway, thank you for watching. I'll see you guys in the next one. Take care. Happy investing. Bye bye.